In this video, I'm going to go through this practice problem to show you the journal entries in T accounts. Now, I have several lecture videos and a T account practice problem already in this series. So now we are putting it all together and doing the whole process of the journal entry first, then copying over to the T accounts or the ledger, and then preparing a trial balance. So I have a page for the journal entries here. The T accounts are on the second page, and on the third page, I have a trial balance to fill out. And you can find this blank worksheet on my website, along with the answer key. Okay, so let's go through these one by one, and we're going to be using the same debit credit rules that we used in the T accounts. Assets, withdrawals, expenses, we add to those with debits, subtract with credits. And then everything else is the opposite. You add with credits, subtract with debits. I'm just going to go through these transactions one by one, show you the journal entry, and then afterwards we'll go over to the T accounts. The first transaction is the owner invested cash in the business by depositing $44,000 in the business checking account. That was on December 1st. You could put the year above. You could add a line to add the year, but I'm just going to skip that and just go right into the month and the day. This transaction is going to increase cash of the business. When you add to cash, which is an asset, you would do a debit. And remember, I said in my lecture video that debits go first. So I would put the 44,000 in the debit column, and I would put cash on the first line. And then the credit would be to capital. When the owner invests money, that increases their capital. And when you have a capital account, you add to that with a credit if you go back to these rules. So I'm going to put the owner's name, comma, capital as the name of the account. And I forgot to put page 1 up here at the top of the journal. And then along with the journal entry, you would want to put some sort of explanation of what happened. Now, in real life, this would be like the memo line or the description line in the software, and you would probably put some details in here. But for this generic, simple example, I'm just going to put owner investment. Then on the second transaction, on December 2nd, the business paid rent of $700 for the current month. If they're paying rent for the current month, that's going to increase rent expense. So I don't need to put December again. I'm just going to put the second of the month. And in this transaction, we're going to add to rent expense. When you add to expenses, that's a debit. So that's going to go first. And then we're subtracting from cash. So that would be the credit. When you add to cash, it's a debit. When you subtract from cash, it's a credit. And then I would want to put an explanation. Okay, the next transaction on December 8th, the business performed services and earned $9,000 in cash. If the business earned cash, that's going to add to cash. So that would be the debit. When you add to cash, it's a debit. And that's going to also increase revenue. When you add to revenue, that's a credit. And then I would put an explanation. Then in the next one, on the 12th, they purchased equipment for $12,000 in cash. Equipment is an asset, and so is cash. So we're adding to one asset, which would be our debit. That would be equipment. And then we're subtracting from cash, which would be our credit. And then I would put an explanation. Okay, then in the next one, on the 20th, the owner withdrew $5,000 for personal use. That is going to subtract from cash because the owner took money out of the business. And it's going to also add to the owner's draw account or withdrawals account. So if I'm adding to the withdrawals account, I'm going to add to that with a debit. And then, of course, I'm subtracting from cash, which would be a credit. So I'm going to put the date and then the debit first. And then the credit would go underneath, and I'm indenting my credits a little bit to set them apart visually. Okay, the next one, the business purchase supplies for $300 on account. On account is either an accounts payable or an accounts receivable. In this case, since it's a purchase, that would be an accounts payable. They're going to owe the money, so this is going to be a debt. So I'm going to put the date and I'm going to put the debit first, which in this case, if they're purchasing supplies, supplies is an asset. We're adding to an asset, which would be a debit. And then we're adding to accounts payable. When you add to liabilities, that's a credit. And then for the description, I'm just going to put purchase supplies on account. In real life, I would maybe put the vendor name in here also, but since I don't have that information, I'm going to skip it. Then on the 26th, the business performed services for $15,000 on account. Now this time account is referring to accounts receivable because the customers now owe the business money for these services. So I'm going to be adding to accounts receivable. That would be a debit. I'm adding to an asset. Accounts receivable is considered an asset because it's a future resource when those customers pay. And then I'm going to credit service revenue to add to revenue. So it's the same entry as up here. The only difference is it is accounts receivable instead of cash. And then there's one more entry. On the 30th, the business paid utilities of $500. So this is going to be very similar to the entry up here when they paid rent. This is another expense, although this time it's utilities expense instead of rent expense. So I'm just debiting rent expense and crediting cash for $500. And that's it. Now the journal entries are done. And all you have to do now is post to the T accounts. Now you don't have to sit here and go through the thought process of deciding what account are you debiting, what account are you crediting, because you're simply copying from these debits and credits over to the T accounts. So for the first one, it was a debit to cash, credit to capital for $44,000. So I would just find those two accounts in the T accounts and put the entries in there accordingly. The cash account, I would have $44,000 on the debit side. And then in capital, I would have $44,000 on the credit side. And that's it. Then I just move on to the next one. The next one is a debit to rent expense for $700 and a credit to cash for $700. So I would just find those accounts and put the entries in. And then the next one was a debit to cash, credit to service revenue for $9,000. So I would just put that on the debit side of cash here. And then, of course, find the service revenue account and put $9,000 on the credit side here. The next entry was a debit to equipment, credit to cash for $12,000. So I would find those accounts. And if you want to try to do this yourself, you're welcome to pause the video or fast forward. Pause the video while you make the entries and then fast forward to see if you get the same answer as me. The next one is a debit to the withdrawals account for $5,000 and a credit to cash. So I would find those accounts here and make the entries. And then there was a debit to supplies and a credit to accounts payable for $300. So I would find those accounts here. Here's supplies. I'm going to put $300 on the debit side, and here's accounts payable. I'm going to put $300 on the credit side. Then there was a debit to accounts receivable, credit to service revenue for $15,000. So I would put those entries in the accounts. And then a debit to rent expense, credit to cash for $500. Sorry, that's supposed to say utilities expense. Okay, and I'm going to put $500 in utilities. And now once you have all of your T accounts completed, you would want to add a line under the numbers and then calculate your ending balance. So for cash, you would have $44,000 and $9,000 on the debit side. That adds up to $53,000. And then you would add up the numbers on the credit side, which is $18,200. And then you would take the difference between the debits and the credits. And you should get an ending balance of $34,800. And I'm just going to go ahead and ring over the answer key so we can go through all of these with the answers already here. But your cash account, when you calculate the balance, you would put it under another line. You would create this line, and then you would put the balance on the debit side because these debits were larger than these credits. So the $34,800 is the difference between the debits and credits. And then the rest of these accounts only had one number except for service revenue that had two credits, which I added together. But otherwise, the balance in all of these other accounts are simply the amount of that one entry that was in that account. Okay, and then once you have your ending balances, then you're going to bring these ending balances into the trial balance. So I'm going to take away the answer key and come back to this. So down here, you would simply put in your balances from the T accounts. Cash had a $34,800 debit balance. Accounts receivable had a $15,000 debit balance. Supplies had a $300 balance on the debit side. Equipment had a $12,000 debit balance. Accounts payable had a $300 credit balance. Capital had a $44,000 debit or credit balance. Withdrawals had a $5,000 debit balance. Service revenue had a $24,000 credit balance. And then rent expense and utilities expense had $700 and $500 in there in those accounts. And then what I would want to do is add up all of the debits. And if I add those up, I get $68,300. And then I would want to add up the credits. And I also get the same number, $68,300 on the credit side. So the trial balance tells me that total debits equal total credits. So this is what this problem would look like. I purposely kept this as a very short example because I simply wanted to demonstrate how the journal entries would look, then the fact that you copy those debits and credits over to the ledger or the T accounts, and then you would put the ending balances in the trial balance. And that's all I wanted to cover in this video. If you have any questions, feel free to comment below, and thank you for watching.